to Wine About Real Estate.
Mhm.
We are on episode 2 now, and we're going to talk about the buyer's process. I am your host, Candace Taylor, and this is
Alana Jones.
All right. So we will start right away by getting our bottle open today. Make sure to get Prosecco.
I love Prosecco.
The sparkling wine. I know I always thought it was a champagne, but it's a sparkling wine. So.
Yeah, well, we'll just say champagne.
Champagne.
So we can sound fancy.
Yeah.
Oh, that's
you know what
I did?
What is this?
Last Friday, we meaning my mother and I and my cousin, we went to Wormbauer.
Oh.
Yes, we had some very delightful wines. I'm a member there. So, we get free tastings and stuff like that. You know what? Maybe one of these days when it gets nicer, we'll go there and, video live
there?
or do an episode at the winery and they got free tastings, right? Why not enjoy ourselves? Anyways, it was a great experience. Beautiful wine. It was a beautiful day. And it all worked out because we were supposed to go on a Thursday and then whatever. Me being me, where I can't, I didn't have my life together that day. So we ended up having to.
Do we ever have our lives together?
No, I don't know. So we're supposed to go on a Thursday. Ended up going on a Friday, which was great because Thursday was raining and Friday was beautiful. Anyway, we had a great time. So we are going to be discussing the buyer process today.
Yeah.
And we're going to be talking about the steps and what you need to do to prepare to buy.
Yeah, the steps to prepare to buy, and then also the steps like once you get that contract in, like how everything plays out, because a lot of people I don't think are aware of how the transaction plays out.
Yeah, so a really good thing would be so we talk about the pre-checklist of what you need to do before you buy.
Yeah,
and how important it is.
First is finding an amazing agent. Like that's rule number 1.
Well, 1 and 2, 2 and 1, whatever you want, however you want to put us in order. Here we are. We're fabulous.
That's right. Cheers to that.
And wine about real estate. There you go. So, I would say, do you want me to start? Or?
Go ahead.
Okay, so one of the biggest things or misconceptions I would say about the buying process is most people need to understand there's an accumulation of things that need to be done, and that goes in
before you even get started.
Really. Right, like with your pre-approval process. So you find your realtor, such as Candace or I, we can help you find a lender.
Right.
So we work with plenty of lenders.
That actually came up a lot. This last weekend I was doing an open house.
Okay.
And a lot of people were questioning, well, should I go with a lender or should I go with a mortgage broker? And a lot of people aren't aware that there's differences out there.
Like, so what's the difference?
Yeah, you can go to a credit union or your bank, and those places do have loans as well, but they're very cookie cutter is the way I would say. I don't know if that's the best terminology for it, but they have a set amount of loan products that they can offer.
Right.
Versus if you go to a mortgage broker, they can go out there and find an arrangement of different things that are available unique to that person.
Right.
Based off of their financial abilities, credit score.
Yeah.
We were going to get into that. That's one thing you definitely want to know is your credit score. If you're going to get a loan, you need to know where you stand or where you need to be to get the rate that you're wanting.
And a misconception with that is, what if I have X amount of dollars to put down, but my credit score might not be the greatest? Here's the thing, is there are lenders out there that will allow, you will be able to get a loan. However, it's all about your credit score and how much you have down combined will determine your interest rate.
Right. And that's the thing is a lot of people ask me, well, what do I qualify for? I don't know. You want to talk to a lender so they can deep dive into that personal information to know the specific pre-qualifications for you.
Right, because everybody's different.
Right.
And it's pre-approvals are for each individual. It's not just black and white. Oh, well, I have this credit score and I have this much down, but there's so much more to go with it, and that's why we're here, and that's what we're going to talk about. So,
Right.
with the credit score, so the credit scores of the big misconception is yes, you might not have the best credit score, but maybe you have a good amount of money down,
Right.
and you're willing to pay a higher interest rate.
Yeah.
I don't know. Maybe you find out what your credit score is, and that lender is like, "Hey, I can help you repair that." So, in 4 to 6 months, um,
Yeah.
you can buy and have a better interest rate, and I have a really good story for that. So I did have a client. I said to them, "Get your credit, go to a lender, look at everything, have
Right.
them look at everything, get all your stuff in there." His credit score wasn't the best. His debt to income, so when you hear us saying DTI, that means debt to income, wasn't that great.
Okay.
So what the lender did was help them repair their credit, help them, they like basically organized everything to help them get their credit score up and get their DTI down.
Okay. Yeah.
So then when they did that, all of a sudden, I would tell you this person probably repaired himself in from start to finish 4 months tops.
Wow.
And it ended up buying a brand new home, and they had a certain home in mind, and they ended up going to the next, like, you know how at brand new homes you can buy, you know, the 1,400 square foot home or the 1,500 square foot. They only had the 1,400 square foot in mind, but for 20,000 more, they were like, why not? It doesn't change my payment that much, and they ended up getting the $1,500 square or 1,500 square foot home.
Yeah. So they could actually buy
Yeah.
something a little bit better than what they had even predicted.
Right.
Yeah.
So that's why it's so important to really plan out and get in touch with your lender, get in touch with your realtor, even if you're like, well, even if I'm not going to be ready to buy for 6 to 8 months, yes, even if.
Yeah, honestly, like we plan on doing this for years to come.
Yeah.
I know for myself, at least
Yeah.
30 years or more.
Yeah.
So, I mean, whether you're looking to buy now or 6 months to a year, you want to be talking to your agent, I would say at least a year to 6 months out before you actually decide, like, yeah, I'm ready to buy. I mean, if you're ready to buy now, I mean, any agent's going to want to help you, of course.
Of course.
But if you're really working with an agent that's going to help you step by step and make it feel seamless, like there's going to be stress involved any which way. It's the biggest financial decision you're going to make in your lifetime. So having it feel seamless and somebody who's been through this process over and over and over again in our 8 years, we're there to help you through that. And I think it's really important to connect earliest as possible.
Yes, because it, like Candace, just speak to what Candace has said, it really will help you have one of the most seamless processes, because not only they're going to take your credit score into consideration, they're also going to take in part of that pre-approval is checking your credit score. Then there is another misconception about I have to have 20% down. No, you don't. I mean, different programs are out there for buyers where I think they even have a conventional now where you're only like 3.5% down.
Right.
And that's 3.5% of the purchase price.
Right. So. Right. And I think that's a huge misconception too, because like as many products are there out there for down payment assistance, first time home buyers, there's all these programs out there as far as the loan product, but there's also tricks and tricks that we've learned along the way to help as well with buying situations like that, and those creative offers are what are winning the market, and in today's market that we are seeing.
With the buyers for sure.
Yeah, absolutely.
The buyers are winning a lot right now. They're on the winning side right now, I would say.
Oh yeah, it may be a market that's controlled by a seller just because inventory is so low, and that's across the United States. That's not just here in California. But at the end of the day, the buyers are really having a lot of control.
Yeah, they are. I mean, and so that's why we're saying to make sure you have your ducks in a row before you go out there and look for houses, because what if you go out there and look and you're looking at a house that is worth 250 and you're really qualified for 350,
right?
Or vice versa.
Yeah. And I mean, when we're talking price points that in that range, I mean, depending on the area too, I mean, that could get you from one neighborhood that you may have to lock your doors all the time and have a security system and, you're paying all this extra for those things versus if you found out, oh, I could actually qualify for something a little bit more and it puts me in a safer neighborhood and an area where my kid's going to a better school.
Right.
I mean, those are things that, we got to question. What are you wanting to buy? What are your reasons?
Yeah. What are your whys?
Exactly.
Is the neighborhood what's important to you? Is the schools important to you? Is the commute?
Yeah.
Is it important to you? A lot of those, everybody has their different reasons of where they want to be and why they want to be.
Yeah.
So, yeah.
Yeah, I think a lot of people get stuck on the cosmetic looks of it. They want a brown cabinet in their kitchen or they want a white cabinet. White cabinets are so popular right now.
They are.
So I think they get so hung up on those little details. They don't think of the things like commute or, the schools or things like that, which are really important. Cosmetic things can be changed very easily on a very small budget. So.
Oh, yeah. I mean, like paint does wonders.
Yeah, absolutely. Yeah.
I mean, but that sounds like another episode too.
I know.
But how does
There's so much to talk about.
Always, I know. So, what decides your interest rate?
Yeah,
credit score, how much you have down. That is going
debt to income ratio.
What your debt to income ratio is. All of that's going to dictate what interest rate you get. So if you have like the best credit score, you have 20% down and no debt, your interest rate is going to be the interest rates that are always constantly advertised. Right. Those are the creme de la creme.
Yeah.
Yeah.
Which this weekend, the lowest I heard is a 6.28.
Yeah, I think so.
Which is quite a big drop from.
They dropped a whole %.
Yeah, because they were up above 7 for sure. Mm-hmm. So I mean, seeing them back in the 6s is like, I'm seeing light in this tunnel market.
Oh, there it is.
Yeah.
So, with the, I would say I think at the FHA, interest rate is better than the conventional right now.
Yeah.
However, we should talk a little bit about the difference between FHA, conventional, VA, creative financing, and then cash is pretty self-explanatory.
Right.
So let's talk about FHA really quick.
Yeah. So first-time home buyers, you have the Fair
Housing Administration.
There you go.
Is that?
Yeah, Fair Housing Administration.
Yeah. So basically, FHA is a government-backed loan. Mm-hmm. And a lot of first-time home buyers go with an FHA loan. And what the government does is charge you private mortgage insurance because that ensures
PMI.
Yeah, PMI. That ensures the government's going to get repaid.
Right.
So with an FHA loan, whether you have 20% down or 3% down, no matter what, well, not 20% down, whether you have 3% down or I think with an FHA, you always have private mortgage insurance. You
can't get rid of it.
Even if you get to 20% DTI.
So there's FHA, which is the Fair Housing Administration. Those are government-backed loans. Typically, we see 3.5% is the requirement.
Those are the most easy loans to obtain.
Absolutely.
For buyers.
For a first-time home buyer, it's a really easy way to get into a home with a little bit down. Mm-hmm. And then there's conventional, which is, I would say, the vast majority of stuff that I've seen lately is, people that don't qualify for FHA because maybe they've bought a home in the last couple of years and they're wanting to relocate or whatever may be the situation. So they switch over to conventional, which is a little bit more down.
But, with conventional, there are conventional loans out there where you only have to put 3.5 down.
Yeah.
Some lenders have that program.
Yeah. If they qualify with their credit scores, debt to income ratios, and things like that.
Yeah. A lot of people think, oh, conventional loan, I have to have 20% down. No.
Not always.
However, here's like a continuing theme across loans. Whether you're FHA, whether you're conventional or even a VA, if you have 20% down, your private mortgage insurance goes away.
Yeah.
Because you have 20% invested in the home already.
And getting rid of that PMI definitely lowers your monthly payment. It definitely helps a lot.
Yep. And the only way to get rid of your PMI on an FHA loan is if you refinance, from what I understand.
Yes, that's from what I understand too.
Yeah, I mean, I guess we need to do some fact checking.
I know, right?
That would be nice to have the lender.
No, the ones that are really nice are for those veterans out there, those VA loans. Most of them are no money down. I mean,
no, they don't have to put anything down.
Exactly.
No, they don't have to put anything down. And the seller always pays for the pest report, but they don't have to do the repairs. However, the lender will require a clear pest report for the loan to close.
Right.
VA is a little bit more, there's a little bit more hills and valleys, but it's not that difficult to navigate.
No. I mean, it's the same thing you would see in any transaction. I just think that there's more clearancy as far as the lender knowing what's going on with the home.
Yeah. Well, then, of course, the different loans also dictate how an appraisal is done too.
Absolutely.
So VA is probably going to be a little bit more strenuous, meaning they have a little bit, their guidelines are a little bit stricter than an FHA. FHA is stricter than a conventional. Just not an appraiser, but
yeah,
just from experience. So what's next on our list for what else do you think they need to be doing before pre-approval? Saving for their down payment and closing costs?
Absolutely.
So how much do you think a buyer should technically have for the down payment, closing costs combined? Maybe 15,000, 10,000?
I mean, definitely 15,000, but I think to really know that number for somebody, that's where it comes into getting into contact with your realtor and your lender to finding out what you're looking for, what you're looking to get pre-qualified for, so you know what that budget to save
because
for
that is true.
You may already have enough.
Right, because that is true. You do not know how much you need for your down payment or your closing costs until you know how much you're pre-approved for. Absolutely. Because that will dictate that. Yeah. So that's just another reason to get pre-approved before you go out looking.
The nice thing too is like once you know what you're pre-approved for, like you know your max. And I know typically with my buyers, I've always said this, just because you know what your max is doesn't mean you necessarily have to go to that max. And then you know that you've saved enough for that down payment, the closing costs, everything set aside. And if you buy something that's a little bit below your budget to stay within, you still have money left over, which is the smartest way to do it, in my opinion.
Yeah. Well, you do what is best for you.
Yes.
And so let's see. First on the checklist for pre-approval, and before you go house hunting, find a lender. Second, you have your credit ran.
Yep.
And they can always do a soft pull too. That doesn't necessarily mean you have to do a hard.
Right.
But the best way to do it is dive in and really get a really good look at what you can afford, where you're at, and what you can do, because you don't know what you don't know.
Absolutely.
So credit check. Also, what your debt to income is, your down payment, your closing costs, and what type of loan you're going to go with. And then the lender and the realtor are there for you to ask any questions that you need to. We are here to help you every step of the way, so that way you fully understand why you're doing what you're doing and why we're asking for things. And
I mean, a lot of people too don't even realize like they need their W-2s and their tax information, all of those little details that you need to have ready for that lender. Because a lot of people just run in it gung ho, I'm ready to buy a house, let's do this, and then they don't realize for like the pre-approval steps they got to have, at least be in the same job for 2 years.
Yep, or the same field.
Same field, yeah.
Yeah.
And then having those tax information for at least the last 2 years. Yep. All those details as far as like I think they want like the last 2 months or 6 months of bank statements.
It depends on the lender, I think, and what you have down and your credit. It's all individual based.
Right.
Really, I mean, we can sit here all day and say, this is what most typical people get, but really when they do the deep dive into your personal situation, that's when you can really get a good look at what you can and cannot do.
Yeah.
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 So we are going to put that pre-checklist. I have a lender that is willing to give us a pre-checklist to know what you need to get started in buying a home and what is super important. And again, I really suggest, even if it's you're not even planning for a year, you don't know your situation until they do a deep dive.
Another thing people, buyers particularly, don't think about saving for as well is their inspections.
That's true.
You have your home inspection, your pest inspection, your roof inspection. If it's in the city, it's most likely going to be sewer systems that they're looking at. But if you're out in the country, we were talking about that the other way. Well, and septic. So
yeah, and we have a whole other video on disclosures, and that plays a huge part in the buying process too. So check out that video. We already recorded that one. So
yeah.
And you're right. So now that we know what our pre-checklist is and what we need to be doing to get a pre-approval before we ask our realtor, or before you get disappointed and finding a house you love and then find out you're not approved for it.
Yeah.
One way or another, like maybe, like I said, maybe you could buy more house, but maybe you can't. I don't know. It's all specific to your needs, but
right.
Yeah. So, anyways, so that's what we suggest for the pre-buying checklist.
Yes, this is before you even start looking at realtor.com, Zillow, or
all of it.
Having your realtor send you the list of homes that you're looking for. This is just getting started.
Yep.
And then the next step, I think, is really diving in deep with those questions with your realtor as far as what type of buyer are you and why are you buying?
Yeah.
Like, is this an investment property? Is this an owner occupied? Like, it's going to be your first time home. There's so many different reasons why people buy.
Mm-hmm.
So figuring out why you're buying and what is going to suit the needs of that situation.
Yep, 100%. Yeah. So we will have that pre-checklist available.
Yes.
And just go ahead and feel free to print it out. We're giving it to you for free today.
We always love free things.
We both like our little smiles.
You need more wine after that.
Yeah, of course. So, if you have any questions, comments, as always, please do not hesitate to reach out to us. We have very well trusted lenders we work with that we love, and we will steer you in the correct direction with that.
Yeah.
And of course, we're always here every step of the way.
Yes.
Yeah.
From beginning to end.
From beginning to end.
Yep.
First face you see and the last face you see. You're welcome.
Right.